Hello traders, welcome to my channel. This is Dion. Today I want to talk about bias. Bias, I'm not talking about the daily bias, which most of you know, or the weekly bias or whatever. I'm just talking about bias. Okay, I don't know what goes through your mind when you hear bias, but when we say bias, I'm talking about looking at the big picture. Okay, so we have an analysis time frame, and then we have the bias time frame. All right, so when I say a big picture, it's very subjective when we are talking about trading. When we are looking at time frames and all that, it's very very subjective. Someone's bias time frame can be somebody else's entry time frame or analysis time frame. What I mean by that is that there's already someone out there using a 15-minute chart like me, okay? And when you are scalping, you are using the 1-minute chart, meaning your 15-minute chart is actually your bias. All your entries that you are doing on your 1-minute chart, your 15-minute chart is going to be your bias. Okay. For 4-hour chart, when you are looking at if your analysis time frame is 15 minutes and your entry time frame is 1 minute, your bias can be what? 4 hours for the 4-hour chart. Now there are people that trade the 4-hour chart. I also do that sometimes when I want to be in a trade for a long while, especially when there's a really really good setup. So meaning if I'm trading on the 4-hour chart, my entry time frame is going to be the 15-minute time frame. That just means that 4-hour chart is going to be my bias. Okay. Okay, so what I mean by that is this. The 15-minute, I'm a 15-minute time frame trader. Okay, that's just my bread and butter. So when I'm looking at the 4-hour chart, the 4-hour chart becomes my big picture. The analysis time frame, of course, is still on the 15-minute chart, and then my entry time frame is on the 1-minute chart. But the 4-hour chart gives me that bias of seeing where the trade is going. All right, so I just want to give you this example. On the 4-hour chart, the 4-hour chart is on a downtrend. Okay, this is the volatility 75. This volatility 75 is a synthetic index. Okay, so when we look at volatility 75 right now, it's a downtrend overall. You can see the break of structure going to the downside, but there's this leg right here. Okay, this, if you are trying to trade on the 4-hour chart, it's very very risky, because if you entered somewhere here, meaning you are trying to put your profit somewhere above there, okay, which is very risky. But when it comes to you going down your analysis time frame, which is 15-minute time frame, this is doable. Okay, this is very much tradable. All right, so you have this leg right here going back to chase these inducements. This is the leg that you are trying to trade. Okay, so now how bias works this way. Let me go to okay, first on the 4-hour chart, if you know how to mark your POIs already. Okay, I didn't delete the 4-hour POI. This is the extreme POI. Okay, but let's just look at the decision of POI here. Okay, so this is a downtrend on the 4-hour chart. So when you draw your Fibonacci, you draw it from that high to this low right here. This is the low. Okay, and your decision of POI right here, the first order block that appears, if you've been following my videos, this is the first POI right here. So you draw it out like that. Okay, This is your POI right here. Okay, you do that. Now you can see how the market just pierced through this decision of POI. Okay, there were no entry setups even on the 15-minute time frame. Now I'll show you what I'm talking about. There are no entry setups for a sell here. Since you are looking for a sell here on a higher time frame, the bias time frame, which is the forward chart. All right, so let's go down to the 15-minute chart. I see. I want to show you how the bias works. Okay, you don't need to overthink these things. Problem when you think about bias, you are only thinking about the daily time frame. When your analysis time frame is 15 minutes or 1 hour or something less than 4 hours. Okay, so let's go down to 15-minute time frame. Just want to show you how these things work. All right. So this is the decision on POI on the higher time frame. Okay. This is what's happening. So let's just start from down here. I don't want to go through the process of why this was a change of character or why this was a POS. Today we are talking about bias. Okay. So this is the first change of character here. Now, when you go to the higher time frame, the forward chart, this is in a discount zone. Okay. So when it makes this change of character here, first of all, let me go back to the forward chart. I also want to show you perspective another perspective before I talk about that joke. Look at this candle. This is a very important candle right here. This candle right here. So I'll try to make a video about a turtle soup. Okay, I know that's another term you have to learn, but this candle is very important. Mostly when the market is coming down like that, and then it just takes out this previous low right here. So it just took out this previous low. You can see this previous low here, and then the candle just closed above, and then all of a sudden there was another candle that just, so this is confirmed as a single candle double block. In most cases the market tends to go all the way to the upside just to go look for some inducement and a POI. In most cases, you have to keep that in mind. Okay, so when you're looking for bias on the higher time frame, the market did this, and then on your analysis time frame, the 15-minute time frame, the market changes character. The market changes character like this. Okay, so this is good. This is good. Okay, so what you do, this is the 15-minute chart. Let me do this. Okay. Okay, so the market reacted to this order block right here. Okay, this order block right here. If you draw out your Fibonacci like that, here we are looking for buys. Okay, the reason we are looking for buys here is because it's changed character, and also the market has the potential to go to look for inducement and a potential POI here. Okay, this is what bias is supposed to be. This is how your thought process is supposed to be. All right, so you have reasons to take a trade. You have reasons to take a trade. One, there's a change of character on the lower time frame. Two, on that bias time frame, the market is still trying to go to the decision of POI, and there's also inducement that hasn't been taken out yet. Okay, so here you can see this this is equilibrium right here. Okay, this is your equilibrium, and where is your first where is your first this right here is your first order block. Okay, under this POI, under this, I mean this equilibrium right here. All right, so the market, when this is still valid, the candles did not close. This is a 15-minute chart. The candles did not close with the full body below it. Okay, it just swept whatever was down there. When you go down to the 1-minute chart, you can look for an entry there. Okay, I just want to show you what's happening. When you go down to the 1 minute, this is bias, guys. This is how it works. So I'm just trying to show you. Okay, maybe I'll even be showing you the entries too, so that you get acquainted. I remember there was a single candle order block, I think, or an extreme order block. Yeah, yeah. So the market just reacted to this order block right here. Okay, this is where the entry was, right here. Okay, this is where the entry was, and then the market just started running to the upside. Today I'm not doing trade management or risk management. I'm just showing you bias. Okay, going back to the 15-minute chart. All right, but your take profit is not supposed to go all the way into that POI. No, remember that on the bias, on the forward chart, this is a counter trend. This is a counter trend. Okay, you are going against a trend because your bias is saying that it's a downtrend. But when you go to analysis time frame, the 15-minute time frame, there was a change of character here. This is why you are taking the trade, and the fact that the market has the potential to go to this POI and take out whatever inducement is to the left there, so you can take this trade. Now there's a break of structure here. Okay, now the market has gone into uh this POI here, this uh decision of POI. So this is what you do now. Here you have to be very careful. If you are trying to buy, please don't. There's a POI here. Okay, even if the market starts coming down, just wait. Okay, just wait for the if you are just basing your entries on the bias, wait for the bias to at least show you some sort of entry potential. Okay, so this helps you like stay away from the market at least, because you know that the market is in the danger zone. Here there's that potential that the market can drop down. Okay, but look at what happened when we go to the higher time frame. All right, so this candle right here. Okay, so this is the 4 hour candle, and this is the decision of POI. This closed way above. The body closed above, meaning this is not valid. This POI is not valid. You can even delete it if you want. Okay, so if this is not valid, then the market wants to react to what? If this is not valid, then you have an extreme POI, the one that is still here. Okay, this is the extreme POI. So in your mind, you have to keep in mind that there's still an extreme POI up there, so the market has the potential to still go up. Okay, so on your 15-minute chart now, when you go down to your 15-minute chart, okay, let me get that decision or candle back. What have I done? Get that decision of POI. Okay, so now when you go down to the 15-minute chart, on the 15-minute chart, this is the decision, and this is the green candle that you see on the forward chart. This is the green candle. All right, so since you already know that this has been invalidated by this green candle right here, then you know that if the market comes down on your 15-minute time frame, on your 15-minute time frame, here you can see there was a break of structure here. Okay, there was no trade that was taken here. It was too risky. Okay, even if the market bounced off somewhere, I don't know, there's a POI there, but it was just too risky. I was not even looking at it. Okay, here I was looking at it in a sense of a sell, but you can see here, if we mark this as a change of character, and then when you look to the left there, you don't have any POI up there. Okay, now the market comes down again. Okay, and then just touches. Let me draw the Fibonacci here so that you see what's happening. Okay, to that high right there. Okay. Okay, let me zoom in just a bit. Okay, that's better. That's way better. All right. So when you zoom in like that, where is your first decision of POI? It's right here. This is not your decision of POI. Okay, this is inducement. If you see clear, you can see clearly here, there's no pullbacks up there. Okay, so if you pick this as a decision of POI, you are going to lose money. Okay, this is the only pullback in this leg. So this is your inducement right here. And after this inducement, under the equilibrium, this is your first decision of POI right here. Okay, so if you are going to take a trade, this is your first decision. Your extreme is just down here. Okay, all right. So, and then when you go, okay, I'll show you even the entry. When you go down to the 1 minute chart, this is what happens, guys. This is what happens. It's not complicated. There's no uh, you don't have any sort of holy grail that you need to be following. This is all you have to be doing. Okay, so like I said, single candle order block, guys. Single candle order blocks are very important. Okay, sometimes the market just does something like this. Okay, it just leaves this single candle order block, can even give you twice, but sometimes it's even just one. If you miss it, it's bad for you. Yeah, so there was this decision of candle order block. Okay, right here, this is your first decision of candle order block right here. Okay, right here, this is where the market came down and then started rallying to the upside. Okay, there was another decision of this one right here. Okay, which is just in the same perimeters. Okay, so this is where the entry was. It didn't form those two setups that I gave you, and sometimes it doesn't. This is why I'm saying that you really have to master decision or candle order blocks. I know they are aggressive, but you won't be missing a lot of trades. Okay, so that was the entry. Going back to the 15-minute chart. Going back to the 15-minute chart. Today, I don't even want to teach you where to take your profits and all that, but yeah. There was another break of structure here. Now you can clearly see this one. I didn't take it because, let me show you this. From this low to that high right there, you can clearly see the equilibrium was right here. It didn't even go that far. It just took out that inducement and then started going to the upside. So no. Okay, now here This one here, I also took a counter trend on the 15-minute chart, and I'll show you why I took this one here. Okay, I'll show you why I took this trade. Now, when you go to the, let me remove these things. Let me see. Okay, that's clear now. All right. So before I took this trade, because this is still running. This is still running. This trade, I want to show you this trade. This trade is a counter trend. It's a counter trend trade. I don't know if I'm saying that right. Now, you don't just take trades just because they look nice or anything. Okay? Price reacts like this aggressively because there's something up there. Okay, this is the 15-minute chart. Now, when we go to the forward chart, price was reacting to something. Okay, that's why it was a good trade to take. You can see this black candle, that's the counter trend. Okay, this is a fair value gap. This is a fair value gap on the bias time frame. Okay, so already I'm waiting for the market to tap this forward time frame POI, the bias POI I can call it, but the market first reacted to this fair value gap. Okay, now let me do this. I'll just draw it with another color. This is a fair value gap right here. I already told you order blocks. There's a reason we draw order blocks where there are fair value gaps. Okay, let me just change this color to something else. What? Yeah, let's do green. No, let's do gray. Okay, another 15-minute chart. Okay, so that is the fair value gap. Now when you go down, okay, so on the 1 minute chart, you can see what's happening in this level here. Okay, in this fair value gap, this is the forward chart fair value gap. So going under the 1 minute chart, it's actually very risky, and I wouldn't advise you to be doing this. Okay, unless you have a lot of experience doing this. Okay, it can mess up your trading journey. So yeah, I don't want you to be taking these biases if you're just a beginner. All right, so this is what was happening. Okay, I didn't enter up there. Okay, I didn't enter up there. This is not a single candle order block. It's not a single candle order block, and I didn't feel the need to enter here. It's way too risky. So I wanted already the market. I marked this as a change of character down here. Okay, but I was waiting for the market to just take out at least some sort of inducement. Okay, and this is what happened here. I hope you can see it. It's very small right here. Right here, this is the candle I was looking for. So it doesn't matter how small the candle is or how little the distance the candle has moved to take out that inducement. Taking out inducement is taking out inducement. Okay, here I didn't really see anything to enter on. Okay, even if it made this single candle order block here, I just thought it was way too risky. You can see the market came up again to mitigate this single candle, but I didn't enter here. Okay, so I was just waiting for it to take out this inducement, and after taking out this inducement, the market already there was a single candle order block here, as you can see, right here. Okay, right here. This is where the entry was. All right, when it touched this low here, I was already on break even. Okay, so when we go up again to the 15-minute chart, go up to the 15-minute chart. Uh, okay, this is the movement right now. This under the 15-minute chart was a counter trend. Okay, it was a counter trend. You can see this break of structure here. If you are wondering if this was a change of character, it was not a change of character. If you've watched my videos on how you can mark your changes of character, you already know why this is not a change of character. Okay, in this leg there's no pullback here, so this low right here acted as inducement. Okay, and this is where I actually got out. It was not a long trade. The first trade was out right here, and then the second trade was out right here. I didn't go that far down because there was already a really good single candle order block down here waiting just to be tapped. Okay, so that's that. And then this buy right here, this buy, I bought here because the market only tapped into the fair value gap, but there's still a POI up there that hasn't been tapped. This POI up there has not been tapped yet. So that's how bias works. It just gives you some thoughts, okay? Some reasoning in at least why you are taking a certain trade. Not just based on your analysis time. Of course, you can be very much profitable with just analysis time frame, but this just gives you an extra edge if you are trying to, advance. Okay, I don't know if I should show you even here the entry setup. Let's go down. Okay, so even here there was a single candle order block. There was a single candle order block right here. Okay, so it's a single candle order block. The market just upped it, then started going to the upside, and then after doing that, there was this change of character right here. Okay, and then the market did what? Come down. Okay, got some inducement there. Then there was some sort of single candle order block, and then yeah, the market just continued, but entering up there is kind of risky, because there's way too many things. There's too much stuff happening down here, so you would rather just put a single candle order block all the way down here, yeah, and then you just milk that that movement. Okay, so guys, I just wanted to talk about bias, just to show you how bias works. It's not just the daily bias. For those people that whose time frames analysis time frame is 4 hours, yes, the daily bias can be more applicable to you. But if you are like me, who likes, you know, analyzing your chart on the 15-minute chart, 4 hour chart can be your daily, can be your bias, I mean. Okay, so I hope that helps. If you are new on this channel, you can subscribe and give this video a like if you liked it. All right, guys, until next time, happy trading.